What are the top 15 real estate questions to ask when buying a home? Hi, my name is Milton Andrade, and I'm the broker of Franklin Realty Consultants and the team lead at Milton and Associates. Now, I'm here to answer some questions, and these are the top 15 questions to ask when buying a home. Now, first, what is the first step when buying a home? Simple answer. Get qualified for a mortgage. Find out if you're credit worthy. Find out if your income is sufficient. You got to find out what that mortgage is going to equal so that you know when you're out shopping if what you want and what you can afford are in line. And then if they're not, get them in line so that you can start looking for a home. Okay? So first things first, get qualified. Speak to a banker. There are a lot of factors that go into qualifying for a mortgage, like whether or not you have student loans that are in repayment or in default, or if they're deferred, what your credit score might be, what your take-home income is after taxes, before taxes, whether you're 1099 or W-2. There's a lot of different factors. And so it's best to get all those questions answered ahead of time so when you're out looking for a home, you know what to look for. And now I think it's very important that you shop around for a mortgage, but my personal experience, okay, and I've been doing this just going on 20 years, but my personal experience when you are looking for a mortgage lender is look for a mortgage broker, somebody that deals with banks that only write mortgages, because they're going to have a lot of different solutions. For a lot of borrowers that maybe aren't so just out of the box, a paper, the most ideal candidate for a banker is going to be somebody that has W-2 earnings, has perfect credit and great income, and has been in their job for more than 2 years. But there are mortgage options for everybody. And so a mortgage broker will have those options where if you go to an institutional lender like Bank of America or Citibank or something like that, they're going to have 1, 2, 3 different options. That's about it because they're really not writing loans. Okay? So that's one thing to consider. Personal recommendation. Speak to a mortgage broker unless you are perfect A paper or private banking, because that's the only way that maybe a broker wouldn't be able to give you a better deal. But I'll tell you, 9 times out of 10, broker's going to give you a better deal. So just something to consider. Question number 2, how long will it take for me to buy a home? Well, I'll tell you, pre-COVID, 2019, it took buyers an average of 4.5 months to choose a home and to make an offer. And the buying process itself really only takes about 30 to 45 days, but there are a lot of different factors that will go into how long it will take you to buy a home. And I will tell you that post-COVID, based on the very low inventory, the extremely historically low inventory that we have, this could potentially take longer, okay? Maybe 6 months. Depends where you're looking, who you're working with, what kind of mortgage you have, if any, right? Cash buyers definitely have a little bit more of an advantage in this market, but not everybody, right? Cash isn't everything. I'd say that being realistic with what you're looking for and what you can afford and where you are looking is really going to make a big difference. Now, if you're looking for a turnkey home and in this market where you have multiple offers on all those homes, it's going to take you a long time potentially to get the right property unless you're waiving your appraisal contingencies and paying above the appraised value and really doing anything the seller wants, okay? So my advice is always buy the ugly house on the block. Buy the ugly duckling. Buy the one that has a lot of potential, good bones, is in a good area, but maybe needs a new kitchen, needs some updating. I'll give you from my own personal experience. I just purchased a home that was literally the ugliest house on the block. It had been on the market for over 90 days. It had fallen out of contract with a previous buyer because they had some plumbing issues that need to be addressed. Well, that's the house that I got a very good deal on. Okay, I got money off of ask after a price reduction, and I even got incentives from the seller. And that's because I knew they wanted to sell and they were going to have difficulty selling based on how the house was kind of looking and how really showing itself. But nothing was really broken. A lot of things were outdated, and I got a very good deal on that home. So I'd say don't overlook the ugly duckling. If you want to buy a house within 30 days or 60 days or 90 days, that's one way of speeding that up. Other than that, Today, I'd say you're anywhere between 4.5 to 6 months based on the very limited inventory. So be prepared, start early, work with the right people, and you'll definitely make good progress. You'll find that house. Now, there are a lot of different things that go into buying a home. And when I say it takes 30 to 45 days, that entails finding the house, negotiating the contract, putting it into contract, doing our homeowner inspection, doing a title search, getting the mortgage docs, get everything lined up, qualified, ready to go, get your appraisal, get your clear to close, and sign. All those things, there's a lot of things and a lot of people involved. We can do all that in 30 to 45 days because you're working with professionals. The hardest part is finding the home. Question number 3, can I back out of buying a house? Well, yes. But you may lose some earnest money. Earnest money is basically a security deposit given to a seller upon signing a contract. And you can face some legal consequences if you back out of the contract for any reason other than the contingencies that are outlined in a contract. So, for example, you have a few contingencies. First, inspection. Okay? If you inspect the house, even if you sign a contract that is as is, if you inspect the home, you do have the right to back out of a contract within that inspection period if there is something wrong with the home, material defect, that it would make it either impossible for you to finance or is just unacceptable to you. Okay? So you have the contingency for inspection, and that you can get out of a contract. Another one is the financing contingency. So if you are in a contract, and let's say you have 30 days to get your mortgage approved. And within those 30 days, you're not able to get approved because you can't justify income, you can't justify deposits in your bank account, or maybe a gift was done improperly, your credit score dropped, you got a collection that came on all of a sudden, or you decided to buy a house and finance couch or furniture or something right before you close. You ruin your chances of getting qualified for a mortgage. So if you get denied within that mortgage contingency, yes, you can cancel the contract. Make sure it is within that contingency period. Now, another reason could be a title defect. If the seller is not able to provide you clean title, if title insurance is not able to be provided for the buyer or for the lender, then there's no way that's going to happen, and you can also exit the contract. But just be sure that if you do decide to exit a contract, that you are doing so based on the contingencies in your contract so that you don't risk losing your earnest money and then some. Number 4, are real estate prices negotiable? Yes, everything is negotiable. Though, that depends on whether you're in a buyer's market, a stable market, or a seller's market. And it depends on the house, and it depends on the seller, right? Because if the seller says, my house is worth $1 million and I want $1 million, well, nobody is going to make that seller take less than $1 million, even if it's worth half of that. If the seller is not reasonable, then there's no reason to try to negotiate with someone like that. But yes, everything is negotiable when it comes to terms, time for closing, concessions, the price itself, seller contribution for closing costs. There's a lot of different ways that you can negotiate a price. And I will tell you a little tidbit, maybe not in this seller's market, though it's not impossible. Finding a seller to help pay for your closing costs in lieu of a reduction in the price is better for a buyer, because that can offset the amount of money that you would need to bring to closing for your closing costs, as opposed to getting a reduction in price. So let's say you want to try to negotiate a sale price down from $500,000 to $485,000. I would say do the $500,000 with 3% seller contribution, because if the property appraises at the $500,000 and you're able to get that 3%, aka $15,000 towards your closing costs as a gift from the seller instead of a reduction, do that, because then now you've got $15,000 to make improvements that you want in the home. That's $15,000 less you have to bring to closing for your closing costs. That was the cost of the mortgage, right? Taxes, etc. And so that way you can put in the kitchen cabinets you want. You can do the flooring that you want. It makes it better. So when you're negotiating, I would negotiate for a seller contribution as opposed for a price reduction. It's just my personal opinion. And again, the seller has to be on board. So gotta find a seller that's willing to do the dance, to negotiate. But everything is negotiable. Now, negotiating is an art form. And I would say you need to have a very good team on your side to help you negotiate a real estate contract. And that can be your realtor, but it can also be your banker, right? And your title agent and your inspector. There's a lot of different people that are involved in a real estate transaction, and you need everybody's collaboration to try to get the best deal. But using an agent that knows the market, knows the property, knows the community, and potentially even has done business with the other agent, and they have a good rapport where we can talk sense into our buyer and into our seller to make the best deal for everyone involved. I say yes. Consult a real estate agent that is a fit for you in the area that you're looking in, and that's how you're going to get the best deal. Okay? Now, whether or not you use an agent, I would wait until after a home inspection before you try to negotiate a lower price when you are already in contract. And if the inspector does find some major issues, you can ask for a reduction. But like I said, try to get these things fixed prior to closing, or I would sell a contribution to offset what that might be. Now, do you need a great agent on your side? I am that great agent. Hi, my name is Milton Andrade, and I'm the broker of Franklin Realty Consultants, yada, yada, yada. And I have a lot of other great agents as well that work with me. And so we'd be more than happy to help you get the best deal for you. Number 5. When is it the best time to buy a home? This depends on what market you're in, right? A buyer's market, I would say anytime it's going to be the deal that you're going to get. A seller's market, right now, as soon as possible, and maybe during the holidays when there are particularly less buyers in the market. So even if, disclaimer, personal opinion, though I've been doing real estate for 20 years and I come from a real estate family, but I would say that the best time to buy a house, if you want to get a good deal and you're in a seller's market that's very, very, very aggressive and very hard to land a contract, I would say do it during the holidays. Do it November, December, January, where you will typically have less buyers in the area. That is when you can get a very good deal because you have less competition. Now, in springtime, whether it's a buyer's market, a stable market, or a seller's market, you typically have more people shopping for a home. They got their tax rebates. They've been saving money. School's about to start. The kids are in school. Now they can kind of focus on buying a home, and that's when you typically have more competition. So I'd say November is the best time to get a good deal. August, also, summer slows down a little bit. You could potentially get a better deal. But again, it depends on your market. And in this seller's market that we're in the city of Miami, I would say the best time to get a deal would be now, okay, in the winter months. Although you do have less options to choose from, you will typically have more inventory in the springtime. Number 6, should I sell my new home before buying one? Okay, loaded question. It depends because where you're going to live. Though I will tell you that there are many different ways to get around this because you can get mezzanine financing to help you purchase your new home before you sell your old home. Not everybody qualifies, and it is not cut and dry. It's not the easiest thing in the world, but that is one option. Another thing is to maybe put verbiage in your contract, which would give you a set amount of time to find a home so you're not rushed. So think about it. In this seller's market, if I would want to be selling my home right now, I may want to pre-negotiate on the sale of my property an extra 30 to 60 days potentially so that I can find a home that is suitable for me to move into from the one that I'm selling. If you need to sell the home because you do not qualify for the new home unless you sell this one, then maybe selling it before you buy is possible. Like I've had some clients who are purchasing new construction and had to sell their homes before the new construction was ready. And because of delays, they're now in rental apartments. But they needed to sell that home. And the best thing they could do is be uncomfortable for a couple of months in a rental apartment until their new home was ready or move in with family. That is a solution for some. If you don't have to do it, then obviously you probably want to try to make your closing of the sale and the closing of the purchase kind of go hand in hand. And a good realtor will be able to guide you and help you get those two things lined up, or help you sell your home and then find some suitable short-term rental or short-term solution so that you're ready to buy your new home. Okay? But again, do not sell your home if you can't line something else up. I would hate for someone to sell their home and end up renting because the whole purpose of this was not to rent. Number 7, how does my agent get paid when I'm buying a house? Well, The agent's commission is included in the sale price of the home, so they will be paid at closing. A standard commission rate could say is about 6% of the sale price, which is split among the listing agent and the listing broker, the buyer's agent and the buyer's broker. So figure that 6 gets cut 4 different ways. Typically, this means your agent is going to get 25% of whatever that might be. All those things vary, so I wouldn't worry too much about it, but just know that when you're buying a home, the commission for the agent is already structured into the price because the listing agent has an agreement with the seller to sell this home, and then the listing agent has an agreement with the buyer's broker to pay them for procuring a buyer. So you don't have to worry as a buyer that you have to pay a commission. Though I will say that there are some scenarios in which you may find that because it's a very tight or competitive market, a buyer's agent's commission may not be fully funded by the seller, and therefore a buyer may have to make up a portion of that commission, though still fairly rare. But when it does come up, it is worth doing because that's going to secure the deal that you want. Number 8. How much does a buyer pay in closing costs? Well, closing costs usually fall between 3 to 5% of the home sale price, or what I like to say, it's actually 3 to 4% of the mortgage amount. Now, this can kind of skew up or down for many different factors, but if you want a blanket solution to try to figure out what your closing costs are going to be, it's really speak to your banker. But if you want to do it quick in your head, it's going to be 3 to 4% of your mortgage amount. So if you're buying a home at $500,000 but only financing $300,000, well, your closing costs are going to be based on that $300,000, not the $500,000 total sale price. So it's your down payment plus closing costs. That's your total cash to close. Something to consider. Okay, remember, on the mortgage amount. And then you may have some origination fees. You may be paying down points. There are some extra fees associated with buying, but that is typically towards buying down your interest rate or paying your fee to your broker. And I would say if you have a very good broker that does a lot of business, they don't need to make a huge amount of money on you. You can also take a slightly higher interest rate to pay less money, and you can get a broker credit. So there are ways to kind of offset that. And working with a good mortgage banker or mortgage broker will help you kind of minimize that cost. But rule of thumb, it's your down payment plus 3 to 4% of the mortgage amount. And if you're getting a private insurance or some non-Fannie, non-Freddie program, everything's out the window. That can all vary. Okay, this is strictly for FHA and conventional Fannie and Freddie products. Number 9, how can I save money when I'm buying a home? Well, you can check if you're eligible for financial programs or loans available through FHA or VA. If you're a first-time home buyer, you may qualify for an FHA loan or another home buying program that is specifically made for first-time home buyers so that they can put a smaller down payment. Here's another thing. FHA loans also allow you to have your down payment gifted to you by family, employer, the proceeds of the sale of like a car or something. There's a lot of different ways that an FHA loan or a VA loan, if you're a veteran, will enable you to come up with less money. Now, there are also conventional loans at 3% for first-time home buyers, okay? And those are the ways in which you can save a little bit of money by putting less money down to buy a home. Because most private mortgage companies are going to require at least 20% down. And so if you're trying to do that, you're trying to do less than 20% down, it's FHA, VA, or conventional for first-time home buyers. Now, here's the thing. A first-time home buyer is not necessarily only somebody that is their first time buying a home. It's also somebody that owns a home, sold their home to buy another home, and therefore qualifies for a primary residence mortgage, which is a first-time home buyer mortgage. Last, home buyer rebates, also known as commission rebates, are currently available in 42 states and could potentially save buyers thousands. When a home buyer rebate, a real estate agent or broker may share the percentage of their commission that they receive at closing back to the buyer as a broker credit, which can help you get to the finish line of buying a home. So speak to your broker. That's maybe something that they're able to do. They may have to speak to their broker, but that is another way we can try to come up with clever ways to have less money at closing. So you have a broker credit from your realtor, a broker credit from your banker, and low down payment loans like FHA and 3%, 5% down conventional mortgages. Number 10. What is earnest money? Hard money. Escrow. Okay, what does that mean? Basically, earnest money is often described as a good faith deposit from an interested buyer. So when you purchase a home, when you put a contract on a home, rather, the buyer is expected to make an escrow deposit, a good faith deposit. It's money that I'm willing to risk for the seller to take the property off the market and deal with me for the 30 to 45 days that it may take to sell the home. So once the sale is pending, earnest money is placed in escrow, held by a third party. In the state of Florida, is typically a title company, but it can also be an attorney's escrow account. It's a third party account, so it's not the realtor, it's not the buyer, it's not the seller. It is a third party account where the money is held until closing, and then it is credited towards closing. It's credited towards the down payment, or it's credited toward the closing costs. But that money is only held in escrow and in earnest until the sale is completed, and then it is credited towards the sale itself. Now, if a buyer has to back out, like I said before, due to a contingency in the escrow agreement, you do get your earnest money back. However, if the buyer decides to choose to back out of the deal for any other reason, or if the seller decides to cancel the transaction for any other reason that is not outlined in the contract, you may go to an escrow dispute. And then you may have to go to arbitration or mediation or potentially to court to get that money back. But very rare. I've really never even had that happen. So not that you don't have to look out for it, but if you follow the contract line by line, you can get your money back if you need to cancel, or it's credited towards your purchase at closing. Number 11, what is title insurance? Title insurance protects homeowners against claims from things that may have happened before they purchased it, such as an owner's failure to pay taxes or compensate contractors. So let's just say you bought a house, the seller had just put a new air conditioning in, but the seller never paid the contractor that put in the air conditioning. And you may have a contractor's lien come up on the property after you already closed. Well, title company should have caught it, let's just say. But you have insurance that would cover that contractor's lien and not affect your title. And that's what title insurance is for. Okay? You want to have all your legal fees covered, and you don't want to have any exposure. And so those are things that title insurance will cover. Now, there are two kinds of title insurance. There is the lender's title insurance, which is required when you are buying a home with a mortgage. It protects the lender on any claims made against the house. And then you have an owner's title insurance, which, although completely optional, I think is worth having because it is a one-time fee that will protect you from unexpected issues with the home's title for as long as you own the home. It could be 2 years or 30 years or 50 years, however long you own the house. That is going to protect you against any claims. Now, purchasing both insurance policy is usually a good idea, and the combined cost is only about 0.5% of the purchase price. So when in doubt, buy the insurance. Number 12, what should my down payment be on a house? Well, that's a loaded question. I would say if you make a down payment of 20%, you can avoid paying primary mortgage insurance or mortgage insurance premium, whether you're going conventional or FHA. You can avoid paying the insurance on that difference between the 80 and the 20%. So if you do 20% down, it's a straight conventional deal. You'll be paying principal, interest, taxes, and homeowner's insurance, but you wouldn't be paying mortgage insurance. If you put anything less than 20% down, you will have to pay mortgage insurance because that is going to cover the loan on that difference of payment. Realistically, lenders will require at least a 3% down payment for a conventional, 3.5% for FHA, and those will require mortgage insurance. You can also get a first mortgage and a second mortgage to give you a higher than 80% loan to value and avoid mortgage insurance. Okay, because a second loan, a home equity line of credit, typically will be in second position and they don't get mortgage insurance. The first loan is the one that gets mortgage insurance. So if it's a straight one loan kind of deal and it's more than 80%, then you're going to have to pay mortgage insurance. And that's going to vary based on your creditworthiness and the type of loan that you get. In some circumstances, you may not have to worry about a down payment at all. Like if you're a first-time home buyer, veteran, or a rural resident, there are special programs available to help you afford a home. Number 13. How long can the seller take to respond to my offer? Now, the short answer to that is the seller does not have to respond to your offer. If you are not offering what the seller wants or close to what he wants, they don't have to answer your offer at all. Okay, but generally, sellers have about 72 hours to respond to an offer. This may vary by state. If a bank is selling a home or a corporation, let's just say, that can take several days or even weeks because it's got to go through so many different hands and they have to maybe meet a certain threshold. There are some lenders, REO sellers, bank-owned properties that may require the property be on the market for a certain amount of weeks before they'll even consider an offer. And so that is something also to take into consideration. Make an offer that the seller wants, you'll get an answer. But if you're lowballing offers or being unrealistic, then the seller does not have to actually answer you. All right. Working with a local agent that's going to help you strike the right balance between a reasonable cost for you and an appealing price for the seller will get you an answer. So, in short, the seller doesn't have to respond to you, but if you have a good agent, they're going to make sure that you're offering what is good for you and it was good for the seller so that you will get a response and you will get an answer. And maybe even less than 72 hours. Number 14, why do I need a mortgage before I buy a house? Well, you wouldn't go to a gunfight without bullets, right? You need your mortgage approval so that you know what you can afford and so that the bank then has, or maybe should have at least, already gone through your bank statements, your W-2s, your tax returns, make sure that they have all the information necessary, pulled your credit, or potentially, if you had to get a rescore or fix your credit, have that done before you get yourself on that horse of home ownership to buy a house. Like, you're not going to be able to say, oh, hold on, everybody, please stop what you're doing. The daisy chain of people who are buying or selling because I now need to go take care of something. No, that's not how that works. You get your loan approval first so you can speed up your underwriting and your buying process, right? You want to know what you can afford. You want to know what your credit is. You want to know that you can actually qualify for this loan. And all those things are really possible. You can't go into a gunfight with a knife. You got to have your artillery, and your loan approval is that. Okay, I always tell my clients, I need to be prepared to go to war. And if you do not have your pre-approval letter, I'm out there blind. I'm not going to help you or me. I'm going to be wasting a lot of people's time. As a listing agent, if I receive an offer that doesn't have a loan approval with it, what is this? This is a waste of time. So you get approved for your mortgage and you get your approval letter so that when you submit your offer, this approval letter is my proof that I can perform. It's just as good as proof of funds for a cash buyer. Yes, you get your mortgage approval first. Don't ever go shopping without it. And if an agent is going to take you to look at homes and you don't have your approval letter, like, don't worry, trust me, I can find it. That's not actually the agent you want to work with. You want to work with a guy that's going to insist you get it. Because that's the person that's going to be fighting for you to get the best deal that they can for you. Don't work with somebody that's going to work with you if you don't have a mortgage approval letter. Like, honestly, that you're just looking at furniture at that point because you can't buy anything. So get your mortgage approval. Last question. Number 15, how can a real estate agent help me buy a home? Well, the buyer's agent can help you find a home within your budget, schedule the houses that you like, and negotiate with the sellers. Top real estate agents have in-depth knowledge about your area and can save you time and money by narrowing down your best possible options. Matter of fact, you may not know what you do not know, but a good agent does. And by asking the right questions is going to get you to know what you don't know so that we can then find the right house with the data that you didn't even know you didn't know, right? Too many don't knows? Well, I know, so you don't have to worry. Real estate agents have access to the multiple listing service. Comes in handy, but also we are plugged into the local market. We know sellers that are on the fence about selling that you're the perfect buyer for. Maybe there's a lot of sellers out there that don't want to put their property on the market because they don't want people going in and out of their homes and judging all their furniture. They want to get the phone call from the agent that they know saying, hey, I got the perfect clients for you. They're looking for your type of home in your neighborhood and in that price. Would you sell? And they'll say yes. That's how you can avoid a multiple offer scenario. You can avoid all the stress. Working with the right buyer's agent is going to not only get you homes from the MLS, but potentially homes that aren't even on the MLS. You know, the past couple of contracts that I've put together, they haven't even been on the MLS. These are homes that I have found because I've got people calling nonstop day and night for sale by owners, expireds, and circle prospecting to find more homes Okay? That's being plugged into the local market. And I have a plethora of people who I've sold homes to, hundreds, if not 1,000 at least, people who I've helped get homes over the last 20 years. And I know that they may have outgrown their home, right? And they're ready to move on to something else, but they've been on the fence. Well, hey, seller, I have the right couple for you that are qualified and ready to go. Would you consider selling your home? Yes, is typically the response. And so working with that right agent is really what you want. Try to get that contract before it's even listed. I'll tell you, the last 2 contracts and at least 5 this year that I've been able to put together are homes that haven't even been on the market. Buying a home can seem overwhelming and confusing. An experienced real estate agent is going to put your mind at ease. Connect with the best local agent to help you. Hi, I'm the best local agent to help you. My name is Milton Andrade, and I'm the broker of Franklin Realty Consultants. Let me and my team of agents help you find that right home. We're going to guide you properly. We're going to make sure you're dealing with the right banker because I need the right teammate to make this happen. And we're going to guide you for the right property that is for you, okay? I don't try to give my opinion on homes because what I like is kind of irrelevant, but I'm going to get you the best deal for the home that you want. So give us a shot. You can reach me direct. My name is Milton Andrade. It's 954-629-9952. If you like this content, like and subscribe below. My contact info is right there, our website, our mailing list. We're happy to help you, and I look forward to working with you all.